Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. Global liquidity is one of the most important factors that affects the price of Bitcoin, and when you measure it that way, there are really two parts to world liquidity. Two things are important: the rate of credit formation and the strength of the dollar. The strength of the dollar is important because a lot of foreign debt is denominated in dollars, which is why global liquidity is often measured in dollars. That part with the dollar is pretty important. You can either get faster credit creation to make the world's money supply better. You could also get the dollar to be weaker around the edges, which would improve world liquidity since the denominator would be different. With an investment of $418 million spread out among several funds, including a $238 million stake in BlackRock's iShares Bitcoin Trust, the Bitcoin ETF market is making a big move. This change shows that the SEC is becoming more open to Bitcoin exchange-traded funds, which could mean that Bitcoin prices are going up. Lyn Alden, an investment expert, recently talked to journalist Paul Barron about Bitcoin's promise as a store of value and the problems that come with its volatility and lack of regulation. Alden also talked about PayPal's entry into the stablecoin market with PYUSD. The coin has quickly grown in value to $500 million, but Tether and other well-known players still hold the majority of the market. She talked about how changing rules and the rise of stablecoins that pay out returns could affect the market. Even with all of these problems, Alden thinks that Bitcoin's price could go up soon because more institutions are becoming interested and regulations are changing in a good way. Before we go on with the rest of the video, make sure you subscribe to our daily 5-minute crypto email. It has all the latest Bitcoin and crypto news. It's a great look at on-chain crypto data and splits, and the best part is that it's free. In short, they'll talk about what experts think will happen, how on-chain crypto data is broken down, and any breaking news you need to know. For over 50,000 other people to help you become a better crypto investor right now, click the first link in the text and enter your email address. I've always thought that global liquidity is one of the most important factors that affects the price of Bitcoin. Cross-border capital has also made this point many times, and when you measure it that way, there are really two parts to world liquidity. One is the rate at which payment is made, and the other one is the strength of the dollar. As I said before, a lot of foreign debt is denominated in dollars, so the global liquidity is often measured in dollars. So that part about the dollar is pretty important. It's possible for global liquidity to improve either by making credit production faster or by making the dollar weaker around the edges. Changing the denominator in either case can improve global liquidity. So I do believe that we will have another good liquidity cycle in the coming years. There has been some stagnation there for a while, as central banks try to tighten. I think we'll probably see another move upward, and Bitcoin should do pretty well in that setting. Bitcoin and stablecoins have been the two most important crypto apps in the past, right? A lot of people have become interested in these two things, even during bear markets and boom markets. As you may know, Bitcoin is a new way to keep value. To put it simply, it's a better form of money than most of the others we know. But because it's still small and not widely held, people try to build leverage on it. It goes through these cycles and it's volatile as it hits its total addressable market or gets close to what it will be in the end. Stablecoins are just digital dollars. The need for dollars or desire for them is met by this. So far, there are two main ways that stablecoins can be used. That's the basic unit of account for trading and DeFi on different crypto sites. A lot of that will happen on Ethereum. The other big use of stablecoins is to meet the need for dollars in the global south, which Tron does well for. That's pretty much two different worlds of the same thing. In this way, stablecoins are very useful as a short-term store of value like operating capital. Basically, being able to handle fluctuation is a bit of an advantage. You can basically say, I'm willing to hold something for the next 4 years more if you have a lot of money. Stablecoins, on the other hand, are like checking accounts when dollars are useful. What do you think? Do you think it will settle on Tether, USDC, PYUSD, or one of the European stablecoins? Where do you think that market is going to go from here? So far, it has been shown that network effects are important. For example, liquidity leads to more liquidity, which in turn ties the network effect together. And this has been pretty amazing. This is likely stronger than I thought. I've also been keeping an eye on some steady coins that pay out a yield. You can think of them as tokenized T-bills. Things that try to give the yield to the holder instead of the provider making money off of it even they. They're growing, but they're not really taking over the market very fast. It's clear that network effects are pretty strong for stable coins. And I'm not sure how many there will be or how strong those network effects will be, because some of it is like the bullying effect of rules, you know. Some local ones try to use the government against the offshore ones, and you go back and forth between them. That being said, I wouldn't try to guess some results. I do think it makes sense for all of these groups to try to get into the stablecoin market, since it's big and could be rewarding. But it's hard to say what will happen. Taking things as they are, I believe Tether is a very strong position. A Prime dealer has been more in favor of Tether than its competitors onshore. So, there haven't been many strong attempts to change that. I think things will probably stay the same. Some stablecoins could continue to win market share in the United States, but Tether is so far ahead in the world that it would take a pretty big event to change that. So I think the current trend will continue. Lyn Alden says that Bitcoin has the same number of transactions per second as traditional systems, even though the number of transactions per second is smaller. She says that Bitcoin, which is an international and open source alternative, could finally take the place of current settlement systems, which aren't working well because there are a lot of transactions but not many volumes. Alden thinks that Bitcoin's volatility will go down as it becomes more spread out and less concentrated among a small group of users. This will mean that the price will be more stable. Alden also thinks that AI will play a bigger role in the crypto business, which will make things run more smoothly and get more done. Even though there are bigger regulatory problems with bigger cryptocurrencies, she is still hopeful about good policy changes for Bitcoin, taking backing from both parties as a positive sign. With these things in mind, Alden's research shows that Bitcoin's price might go up as more people use it and as regulations become clearer. Let's go back to the talk and watch some more clips to learn more from Lyn Alden. As you say, it's funny how big that number is, so I like to compare the sizes of settlement amounts. America's gross settlement amounts are over 1 quadrillion times its GDP, which is measured in tens of trillions. And what's interesting about that chart is that it shows pretty much the same kinds of deals that Bitcoin can make. More or less, the average number of activities per second is about the same. The only difference is that it's not open 24 hours a day, 7 days a week, and you have to be authorized to use it. That's pretty much it. Bitcoin is like a Fedwire, but the world open source one is now much smaller. That's kind of why I compared them. You can build on top of them. Because it's at the bottom of a stack, Fedwire handles an absurdly large amount of processing for a small number of activities. I remember a long time. Today is 15 years since the beginning, and I think that the trends will continue to be less volatile for another 15 years. Basically, it's my opinion, mostly because a lot of people share it, if it's something that not many people believe. One big player can have a lot of power and either blow up or buy in to move the market. On the other hand, when you get 5 times more of an asset's broad distribution, you have more sleep. This has historically been a cycle distribution during bull markets. Long-term whale holders will reduce their holdings to take advantage of all the liquidity during bear markets. The stronger hands tend to return, but every cycle Bitcoin gets a little more spread out. Starting out as a small business and eventually going public means that the people who own shares in it become more diverse over time. And I think that once we reach a certain point, the volatility and uncertainty around the stock will go down over time. Dr. Justin Marchigiani, in terms of AI usage,